what I'm trying to do is that I'm trying to accommodate my trading approach using the expertise of software engineer. Yeah, there are people who are making a lot of money, but I was making losses, but I didn't want to give up. The good thing about psychology is like a muscle. The more you trading, the more you improve.
What's going on, guys and girls? Welcome back to another episode of Meet the Trader. Today, I'm very fortunate to be joined by Sylvanas, tuning all the way in from Tanzania. Sylvanas, how are you today?
I'm great. Thank you. I hope you are doing well.
Thank you so much, man. I appreciate you spending a little bit of time with us today. I'm really looking forward to hearing a lot more about your journey, the ups, the downs, and just know a little bit about your story, really. So I'd like to kick these off in a very normal, relaxed way. I'm open to just handing things over to you. Do you want to just take a second to introduce yourself to the audience and tell us a little bit about how you got into trading?
Yeah, okay. As you already said, my name is Sylvanas, and I am from Dar es Salaam, Tanzania. Of course, I am a software engineer by profession, and also I am a part-time Forex trader. So I work as a full-time software engineer here in Dar es Salaam, Tanzania, at a company called Time Corporation Limited. It's a software company based in Dar es Salaam. I also trade Forex part-time, as I said, taking advantage of opportunities as they arise from the market. Yeah.
That's awesome, man.
Yeah.
Super interesting. So background in software engineering and then also part-time trading as well. How do you find balancing both of those things together?
I think most of the big part of balancing these two things together comes to my strategy. The way I develop my strategy is it's involving some coding. Yeah, it's like it's like I trade Forex like I created a program to trade Forex. Yeah, I try to accommodate the Forex trading and approach it from the perspective of software engineer, like programming and stuff. Yeah.
So is your strategy completely automated, or is there any discretion or any intervention that's needed from you at all?
Intervention is only at the execution time.
Okay. But the stop loss, the
but from
take
the analysis part, confirmation. Yeah, every part of the strategy is automated, but on the execution is where I need to be manually into the data, because it's quite hard to get to automate the account on the MT4 and the MT5 for now.
Okay, interesting. All right, I'm looking forward to hearing a lot more about that as we dive into your strategy as well. So you mentioned obviously part-time trading at the moment and still doing your software engineering job. Is there any ambition at some point to give up the software engineering at all and go full-time with trading?
It's not clear, but what I'm trying to do is that I'm trying to accommodate my trading approach using the expertise of software engineer, like automating every part of the trading and stuff. Yeah.
So it sounds like you're really making the best of both worlds. You're bringing your software engineering background to really help you as a trader. Would that be right?
Yeah, sure.
Okay, awesome. And how long has it that you've been trading for?
Of course, I started trading. Maybe I can give you a little background of my trading journey.
For sure, yeah, please do.
Yeah, of course. Of course, I got introduced to Forex trading back in 2016 while I was still in college. And this came after hearing a story about a young South African. I don't remember his name, by that year, he made $1 million out of Forex. So I was curious. So I started to go to YouTube to take some courses, and unfortunately, it ended up confusing me. So I decided it's not my thing. So I gave up. The following year, I saw my friend from another college posting he was making profits from his MT4 screenshots and stuff. So I decided to approach him, and since I was already decided that Forex is not my thing, I approached him and asked him to do some account management. So I put in some capital, and he'll be entering some trades. Whenever he trades, he plays on my account too, but it didn't work. So that's when I decided to go back and start Forex again on my own. I opened a demo account and started practicing trading. I advanced. I opened a real account. I banned a lot of accounts, of course. So I traded on and off until 2022, where I started to trade consistently. Until now, consistently means that I've never left the market since 2022 till now. Yeah. So that is a little background of my Forex journey. Yeah.
Very, very interesting. What is it that made you believe that trading could be worth it in the end? Because it sounds like from your initial experiences, it wasn't so successful for you at the beginning, right? You took the courses at the beginning, you didn't really see much luck. Then you invested capital with a friend. That also didn't work out. What made you believe that it was actually possible for some people?
Of course, while I was still trying to find myself in this Forex trading, of course, I was delivering more losses than profit. But on the other hand, I still saw some traders making profit, making big profits. That fact kept me interested in learning more about Forex.
Okay, so you had some exposure to people actually making money from the space.
Yeah, there are people who are making a lot of money, but I was making losses, but I didn't want to give up. Of course, sometimes I was making profit myself. So I saw some lies at the mid of losses. So I decided to keep the journey, go on. Yeah.
Okay. Nice, man. So, okay, you mentioned obviously you started a little while ago, back in 2016, but you mentioned only since really 2022 you've been kind of consistent, right? Constantly showing up to the markets. How long ago has it been since you started trading with prop firms?
I started, I think it was in 2022.
Also 2022.
Yeah.
And are FundedNext the only prop firm you trade with? Do you trade with multiple, or you only with FundedNext?
Unfortunately, I tried to trade with my Forex fund.
Okay.
But
we all know how that
eventually it got close. Yeah. Then I got into the True Forex funds, if I'm remembering correctly.
Okay.
Of course, it got closed also.
Yeah, so it sounds like you have a little bit of bad luck with prop firms so far.
Yeah. So of course, I decided to jump to FundedNext. Of course, FundedNext has been good since the start to now.
They've broken your bad streak with prop firms then.
Yeah. FundedNext, they're very straight.
That's awesome, man. What is it that made you want to choose FundedNext? Because obviously we know that there are many prop firms out there these days. It's quite a competitive space. What is it about FundedNext that made it stand out for you?
The first thing about FundedNext which attracted me, to be honest, was the 15% profit split from the evaluation process. Also the promise of the 24 hours payout process. Yeah. But more importantly, the rules are very straight.
Okay. Okay.
No hidden rules. Yeah. Yeah, you can, of course, you can customize your account whenever you want. If you want swaps, you don't want swaps. Yeah.
Awesome.
Plus some reviews from Trustpilot. I visited Trustpilot and read some reviews about FundedNext, and I made my decision to go with the FundedNext.
Awesome. So it's been, I guess we're into our third year now that you've been trading with them. So you've had some pretty good experience, pretty good time with them, and everything's been positive so far.
Yeah.
Awesome. All right, Sylvanas, let's get into the meat of today's episode. I think what most people usually tune into these for is to hear obviously a little bit about yourself, but they want to know how is it that you're actually trading. Obviously, you come from a pretty unique background in that you're automating your system with your software engineering background. Would you mind going over some charts with us and actually just talking us through what specifically your software is looking for in terms of analysis and how you're actually getting in and out of the market?
Okay, so should I share my...
Yes, please.
Okay. You can see my screen now.
Yeah, all good.
Okay, before I can start to explain about what is going on in this chart, maybe I can give you a brief introduction about the strategy I'm using.
Yeah, go for it. Sounds good.
Yeah, of course. So this strategy uses already available tools on the TradingView or MT4 terminal. Here I'm using Bollinger Bands. I'm using moving averages. So I developed this strategy because I wanted to create an approach that was mostly based on numbers. So I wouldn't have to make many decisions while I'm trading. So from the chart, I'm using moving average so they can clearly tell me where the trend is heading, the direction of the trending. So the Bollinger Bands I'm using so they can tell me about, they can give me signal about overbought prices and oversold. So combining these two things and adding to the fact that I'm the software engineer, I was easily able to code this custom indicator, combining these three indicators into one indicator, which could easily give me a signal of overbought and oversold prices. So from this strategy, what I'm looking at is I'm waiting for these signals of, you can see my chart here.
Yep, all good.
Yeah, okay. From this strategy, what I'm looking at is I sit aside and waiting for the overbought or oversold signals, in which on this chart, you can see them by this. For the case of oversold signal, you can see the green dots below the, and overbought signal, you can see the red dots above the candles. So whenever I receive this signal, this is where I start to analyze what is happening. So after receiving this signal, after developing this strategy, I also prepare some patterns which help me to make a decision on what this oversold or overbought signal is telling me. For example, you can receive an overbought signal, which ideally, when you receive an overbought signal, you are just compelled to go and sell that instrument or pair. But for me, I further look at how these signals occurred and compare the signal with my available patterns, which can help to tell me whether it's a new trending that is emerging, or the signal for a reversal signal, so we can, for overbought, so we can sell, and for oversold, so we can buy. So after receiving this signal, I start to analyze using my available pattern, and which the most popular pattern that I use is the most common ones, which everyone is being taught out there, such as double top, double bottom. Yeah. So for example, For example, I can analyze this trade for you. Okay, so in this candle here, I received the first overbought signal right here. So according to my strategy, whenever I receive a signal, the process that follows is to set a confirmation level. So when I receive this signal, I set a confirmation level on the side of there if I want to buy and if I want to sell. So after I receive this signal, for the side of the buy, I set a confirmation level above when the price above, in which when the if price is successful break that confirmation level, I consider it a buy. So for me, I set up the rules of setting confirmation level. I apply the rules of ABC wave pattern. Maybe I go back to the price like two wave or three wave, depending on the momentum of the price. So here I went back to the price, two waves from the lowest part. I went back to the, let me start to draw here. This is the lowest part before the signal was occurring. So I went back like three waves. This is the second wave. This was the third wave back. So I set the confirmation level around this level here. So after setting the confirmation level, I set an alert. If the price reaches this point, I know I'm going to buy. Also, on the side of the sell, after signals occurring here, I'm going to set a confirmation level on the other side. If the price reaches, in this case here, if the price decided to turn back and reach this level here, the lowest, before the signal was occurring, I'll continue and sell. So on this price, as you can see, the signal, the following signals that I've analyzed, I don't consider them until one of the confirmation is reached. Like you can see, the signal is continuing to come out until it reaches here. When it reaches here, because I've automated this trading view alerts, I get a message that the price has reached the buy confirmation level. So I come immediately and I place my trade here. So before placing a trade, I look at the size of the stop loss and take profit, which I should be setting for this trade. So I have another indicator specifically for telling me the stop loss width and take profit width for this market condition and this time and space. So I have this one. So basically what this indicator does is that it takes the volatility of this pair for the last quarter and average it down for a daily volatility and split it into two. So the width, the width of my stop loss usually is a half of the average volatility of the previous quarter. Because I decided to put it this way because I decided to focus only on the daily trading, and if I focus on the daily trading, I need to know the average daily volatility of this pair. So I split it into two. So I split it into two because I need to enter into a trade, and I usually like the trade to to go to the stop loss or to the take profit within the same day. So I split the volatility into two. So I decided my take profit and my stop loss. So I set like this. After that, I've already get the width of the take profit and the stop loss. So I set this here. So also my risk reward on all my trades is 1:1 because I decided I'll be trading 15 minutes time frame and not other time frame because I'm a day trader. So when you're trading the lower time frame like 15 minutes, the price movement is very random, and you're more likely to get more trades with a lower winning rate compared to higher winning rates, higher risk reward ratio like 1:5, 1:. Yeah, it's kind of difficult on a lower time frame, but for me, I decided to use 1:1 so it can give me a win rate that will make me profitable in the long run. So I use 1:1, and after I put this trade, also I set an alert on the take profit side and the stop loss side. So when the levels are any of the levels being hit, I receive a message and I know my trade is already finished. So basically my strategy is based on technical, but sometimes when on the news calendar there are maybe there are big news that are expected in the day, I tend to a little analyze fundamentals, so I can use those fundamentals as a catalyst to my trades. If I see the expected figures on the fundamental are against my trade or what I expect, I decide to leave the chart for a while until the news are released. So this is briefly how my strategy works.
Very, very interesting. You know, I really like this because it's very different to a lot of what I typically see, you know, traders trading, which is normally some type of price action or, you know, people say things like SMC or ICT. These are like the, you know, the methods that people go down nowadays. But this is obviously very, very unique. I'd like to relay what you shared with me back to you to make sure I've got an understanding of exactly what you were saying there. So from my understanding, you firstly have got moving averages to give you an idea of trend and bias and things like this. You then couple this with Bollinger Bands, which are your own sort of customized settings, which tell you or give you an indication of overbought and oversold. You're then primarily looking for an indication from your indicator to tell you whether there's an overbought or an oversold signal. And then you're using ABC patterns to give you a predetermined level to tell you where you must go either long or short after it goes through a certain point. And then you're using targets and your stop loss based on volatility, right? Both on either side.
Yeah.
Would that be an accurate description of your approach?
Yeah, most accurate.
Yeah. Okay, perfect.
Yeah.
So I noticed you're obviously sharing this with us primarily on currency pairs. Do you trade anything outside of currencies, any commodities, equities, anything like that?
For now, I trade on currencies, specifically dollar yen and pound yen.
Okay. And you've obviously been showing us and demonstrating this, and you obviously mentioned there that you prefer an intraday approach. Does this sort of strategy work on all sorts of time frames, or is it only suited to the 15-minute?
Yeah, it's of course, as I said earlier, this strategy is the basis of this approach I'm using is basically the statistical analysis of the price data. Okay. So it basically works in any time frame.
Okay.
In fact, it is actually more accurate on larger time frames than lower time frames.
And so
Yeah.
you mentioned a little bit earlier into the interview, you mentioned obviously the bulk of your strategy is pretty automated, which you've been able to show us here, right? The only part which has some level of discretion is your entry, and that's where you kind of need to be at the charts. Do you ever find that having to be at the charts conflicts with your job, and that's something that you're kind of battling with? Or does your job allow you enough flexibility to be able to be on the charts whenever you get those alerts?
It depends. Sometimes I can receive a signal. Maybe I can receive a signal that there is a confirmation level has been reached, so I need to be entering the trade right now, but I can be a little occupied on the job, so I leave the trade. I don't take the trade.
Okay, because this is a common battle. It's a common issue that we tend to hear from people that are not trading full time, and it's usually, and this is why I asked it earlier, it's usually a lot of the reason that people actually want to take the plunge to go full time so that they can kind of put their complete time and energy into something which they really, really enjoy. But then there are few people that actually prefer having that kind of multiple sources of income, whether it's from a job, whether it's from a business, and then they keep trading as a side hustle, and that kind of works best for them. Which one do you think sort of fits you better?
I think it depends still, because I believe that if you want to trade successfully, your mind should, and you should not focus on getting money from the trading. Your mind should be clear of that. But if you're lucky enough to trade until you reach a level that the money is not an issue, you can just switch to full-time trading. But if you're trading while you expect to get money from the chart, I think the psychology of trading will be a little bit hard for.
I think there's a lot of truth behind what you said, because I went through a very similar battle. I quit my day job many years ago. This was back in 2018. I quit my job, and my desire at that point was I wanted to become a full-time trader. And at that point, I had some breakthroughs whilst I had my job and I was trading on the side. And so I thought, well, I don't have a job now I could just be full-time trading. But what I found was the moment I stopped getting paid from my job, I became so much worse of a trader because I needed every trade to win now. I wanted to get paid from every trade, and it actually made my performance worse in the end, which ironically is not the way I wanted things to go. So talk to me about how you came up with the idea behind this strategy. Is this something that you did a lot of sort of back testing to kind of figure out? What made you want to go down the automated route rather than, you know, kind of a more discretionary approach for everything?
I think the first time when I was cracking about the strategy, I was trying to get what is this? I tried to get a breakthrough where I can get a strategy where I can win all trades. So I switched into a scientific approach of analyzing the chart. So I go all the way to statistical approach. I learned things about standard deviations, mean price, whatever. So I was trying to introduce science on the chart, but after completely introducing science on the chart, but at the end I realized that trading is never a science alone. Trading requires some arts. That's why trading is very hard. So there's this saying, they say that trading is a scientific art. So it's both science and art.
Yeah.
So So like after I finished incorporating the statistical approach on the chart, I started backtesting. While I was backtesting, this is when I was discovering this pattern when I see this pattern on the overbought, what should I do? When I see this type of pattern, so I have a list of my pattern where when I see the signal, I compare to my pattern, set my confirmation level, then off I go when the confirmation level is hit. So I backtested with a lot of historical data on the trading view. After that, I went a little bit further and I coded this strategy on the Pine script on the trading view. I coded it to the strategy and I backtested with a relatively huge amount of data compared to what I was doing manually. So after backtesting, I realized the winning rate was quite fair. Of course, when I was backtesting, automatically the winning rate was around 55 to 60, which for me was very enough. But when I was doing manually, as you know, when you're backtesting with historical data, you already see the price data in front of you. The winning rate is quite high, up to 80% sometimes. So for me, I decided 55 to 60 is enough for me. So that's when I got confident and I started to trade this strategy, and I've been improving this strategy ever since I started to trade it.
Okay.
Yeah.
Awesome. Okay, I think that's been a really great insight into your strategy and the approach behind that. Feel free to stop sharing your screen now.
Okay.
Thank you so much. Okay, so thank you for that. That was a really great insight, especially explaining something which is so unique to you. You know, it's something that I've obviously never come across before. And I think you did a great job at explaining it. I think everyone watching would have got a good insight into what you're looking for on the charts. I'd like to delve into a little bit about your risk management. So you obviously shared with us that you are primarily looking for one-to-one when it comes to your risk to reward on each of the positions. What sort of win rate do you normally have with this sort of strategy?
Okay, so this strategy, to be realistic, it really depends on the market condition, the prevailing market condition. As I said earlier, that I trade dollar yen and mostly dollar yen and pound yen. So when the market condition is trending, meaning the price is moving either up or down, the win rate is quite high.
Okay.
60 to 70.
Nice.
But when when the market condition changes into ranging, that's when the winning rate drops to 55, sometimes 53 to 57 tops.
Okay.
And of course, I'm still fine with it because I still have an edge to the market.
That's really good. Really good. Sounds like you've got something that works across a variety of different market conditions, which is pretty rare. Given the fact that you are using kind of a fixed risk to reward of one-to-one on either side, I'm guessing a lot of your trades, you don't have any big standout winners. They are just small profits that will add up over time. Would that be correct?
Yeah, maybe the only variable that can make my profit or my losses vary maybe will be the commissions.
Okay.
Yeah, the commission, the swaps.
Got you. Yeah. And with your approach, do you ever find yourself holding positions overnight? Because you mentioned you have more of an intraday approach. Are you looking to close your trades by the end of that day, or are you happy to hold as long as things are playing out as expected?
I usually hold until the trade closes itself.
Okay.
Until it reaches the level that,
Makes sense. And how much are you risking on each of the trades that you take? Do you use a percentage of your account balance, or do you have your own way of measuring that?
I usually use percentage, and my percentage usually, I usually target to risk 1 to 1.5%, but due to some variation, the spread, and everything, usually it is around 1.2, 1.3%.
Okay, gotcha.
Yeah.
And outside of kind of what you've shown us already, so you've talked through your strategy, you've mentioned that you obviously did some back testing for this. Are you also journaling your trades actively as well whilst you're taking them in the live markets?
Of course, I can say I'm journaling my trades, but the way I'm journaling is a bit different from what people know. Usually, when I take my trades on the trading view, I mark where my entry. I mark where my entry occur.
Okay.
So yeah. So whenever the trade finishes, I go back to the mark where I put, and I mark it with the color. I put those loss, I put red. Put those win, I put green. If the trade is still ongoing, I put yellow.
Okay.
This is because I want to, as I said, after I receive this overbought and the oversold signal, I usually compare to my available pattern.
Right.
So marking this point of entry make the process easier for me when I go back and review what a certain pattern and their performance. So that's my kind of journaling, I can say.
So all of your journaling is basically done on the charts themselves. You don't actually use any other platforms or Notion templates or anything like that?
No, only on the chart.
Okay, cool. So one thing I would love to know a little bit more about you and your approach is how psychology potentially plays a role in your trading, because psychology is obviously one of the bigger battles that a lot of traders face after they kind of get to understand their kind of approach and a strategy towards the markets. But I find that a lot of people that have a fairly automated strategy can eliminate a lot of these battles. Is that something that you feel like you can do with your approach, or do you find psychology still has a grip on you at some points?
Psychology affects my trading plan sometimes. You know, as a human, sometimes you can have a consecutive 5 wins. Now, because you're human, you're now compelled that you are the master of the chart. Now the next position you decided to go, decided to put twice the amount you usually risk. Yeah, it happens sometimes, and of course, the good thing about psychology is like a muscle. The more you trading, the more you improve. So sometimes, psychology gets me sometimes.
Yes, I think that's very well put. Do you find your psychology is any different when trading prop firms versus your personal capital?
Yeah, very, very different.
In a good or a bad way?
Maybe if I can elaborate, then you can tell from my explanation.
Okay.
When I trade the prop firm account, I become less emotional about my trades because the money on the line is not mine. The only thing that will be troubling me is the rules. I'll be worrying about the rules, the daily drawdown, the maximum drawdown, and stuff like that. But when you will be trading your own money, for me, when I trade my own money, every trade I become very emotional to every trade because that's my money. That is my money on the line.
Yeah.
But the difference is that you don't have to worry about the rules, of which that can be a very bad thing sometimes. Because you are very free, you can risk 10% a day, whatever you want, because it's your money. That is a very bad thing. I think.
So I was going to say it's a little bit of a double-edged sword sometimes, right? Having that freedom is great to be able to do what you want, but it can also burn you. And so sometimes having the rules and stipulations that are within the prop firm space, they force you to stay a little bit more conservative, which actually can help you in the long run as well. Would you agree with that?
Yeah, that is a very good thing about prop firms. It teaches you to be consistent and aware of the rules. Yeah,
for sure. And I think a lot of people, they blame prop firms for their rules, and they say this is why I'm not successful, but they don't understand the rules are there to actually teach you good risk management, right?
Yeah.
Not exceeding a certain amount and, you know, forcing you to have to not be able to trade for the rest of a day, for example, or, you know, sticking within a certain overall drawdown limit. These are all good things to have, because the deeper your drawdown, the harder it is to recover. So these are all skills that can essentially make you a better trader in your personal capital, but you have to have the right mindset to look at it that way.
Yeah, sure.
Talk to me a little bit about your trading journey at the beginning. So I want to backtrack a little bit. Do you feel like there were any battles or struggles that you used to have that you actually managed to overcome? And if so, how did you overcome them?
Of course, at the beginning, my trading journey was quite challenging. Of course, I did not fully understand how the market operates. And my first trade were more like random trades, not informed trades. Of course, I made mistakes, a lot of money. I think the bigger challenge when people begin to trade, first will be on the expectation which they are trade. Of course, when you start to trade, your educator may tell you, maybe you deposit $100 on an account, and after maybe a week you have $1,000, which is nearly impractical. Yeah. So the first thing will be the expectation. The second thing will be the approach itself, because when you begin to trade, you'll be taught a lot of things, but the process of put the all information that you've been taught into a proper approach by yourself is quite challenging, until you get a mentor and he tells you maybe this piece of information will be put here, the following piece of information will be here, and stuff like that. But I think another challenge maybe will be it's really the challenge, the capital. Because as the market operates, when someone starts to trade and deposit maybe $100 or $500, if you be trading realistically, the money you'll be making $100 will not give you a motivation to continue trading. Because if you are trade correctly, you'll be getting a very few percentage of profit per month, maybe 2, 3. If you are a higher performer, maybe 5 or 10 sometimes. So 10% of the small capital will never motivate you to continue trading.
Yeah. I guess this is some of the blessings that come with prop firms, because I started trading in 2012, and back then prop firms weren't really a thing. And if you had a small amount of capital to start with, you really had no choice except to be aggressive and try and flip your account aggressively to try and make substantial capital so that you could then reduce your risk. But the problem is, in doing that, it teaches you a lot of bad habits. It doesn't really give you anything that allows you to survive in the long run, which obviously poses its own problems. But I love what you said there about, one of the biggest problems that you had, and I think a lot of traders had, and I see this from my position as well, which is their expectations when they come into the market. I tend to find there are so many people that have a flawed perception of what trading is like, because they've seen something on social media, or they've seen screenshots or videos or lifestyle things, which are, just completely giving them the wrong ideas of when they're going to achieve success, how long it's going to take, what sort of money they could be making in what time frame. And it sets them up for failure largely. And I think, honestly, in this day and age, it's very, very difficult for newbies to avoid that, because it seems to be everywhere now.
Yeah.
It's a very, very difficult space. So one thing that I would love to ask you, we're going to start to wind things down now. I think you've shared an amazing amount of information and insights with everybody tuning in. One thing I'm keen to understand from you is obviously you've got quite a number of years experience behind you. You mentioned you obviously started in 2016, and you've kind of been in and out of the markets for the first few years, but been taking it seriously now for the last 3 years, I think you mentioned.
Yeah.
Is there any specific advice that you would share to a new trader that was still struggling to find their edge in the market? Is there anything that you think you could give from your experience that would help them?
Yeah. I can share I can share a little advice to other traders. Maybe the most important advice is that before you start to trade with your money, make sure you have a strategy which have an edge over the market.
Very sound advice.
Have a strategy which has a proven edge, and make sure you stick to that strategy, because many traders tend to jump from one strategy to another, but I can tell them that Forex market is a very huge market, over $7 trillion per day. I'm sure there is a very place for every strategy to have an edge to perform over the long run. So they should have a strategy which have a proven edge and stick to it.
So a question to expand on that, and again, this is, I guess, primarily for the people that feel they don't have an edge yet. How much data or experience do you need to determine whether your strategy has an edge? So, for example, if somebody said to you, I've tested this strategy for the last 2 weeks or a month, would you say that's enough data to prove that there's an edge in the market?
Of course, part of the answer to that question, I will refer to the statement that I told you earlier, that Forex trading, which involves the part of creating a strategy, is a scientific art. Yeah, wherever you backtest your strategy and you see that with the data that I've backtested, I'm sure this will perform. That is up to you now.
Yeah.
But I can advise them to use data from different times in the past, different market conditions, to backtest their strategy across different market conditions, so they can get the actual results of the strategy. But how many years back, maybe how many weeks back, that will be the person the strategy, that will be his choice, because that is an art. Yeah.
I think the way you phrased it there a couple of times, the scientific art, is probably a good way to put it, right? I've always said that I've always seen trading as there's nothing that's really black or white. It's always a shade of gray, because it depends on the person, it depends on the strategy, it depends on the market conditions. There are so many variables to it that there's no way to just quantify it as right or wrong or yes and no.
Yeah, sure.
Okay, one final question for you, and I guess this is primarily for the team at FundedNext. Are there any specific recommendations or things that you like and want to see more of, or dislike and you want to see less of? Anything that we could do from our side to improve?
Yeah, maybe it would be like a suggestion, Maybe if you could increase the maximum allocation capital from 3,000.
Only a profitable trader would say this.
Yeah, maximum allocation from 300,000 to maybe $500,000.
Okay.
That would be good.
Okay, awesome.
Yeah.
Awesome. All right, perfect. Sylvanas, thank you so much for spending some time with us today. Thank you for opening the doors to your strategy, which was obviously very, very unique, and sharing a little bit about your story. I really appreciate it, man. So appreciate you being here.
Yeah, thank you. Thank you for having me.